We are taught that news matters, right? We are taught to follow the news. And if you follow the news, then you can protect your portfolio better. You can grow it better. You can avoid those recessionary 50, 60% losses, right? News is a key. Follow the news. But that's garbage because what is news anymore? And after all, price determines the news, right? So if a piece of information comes out and the stock market goes higher, price said, well, that's good news, or that news isn't as bad as we thought it was, right? Or if a piece of information comes out and the stock market falls and starts falling and continues to fall, then we go, oh, I guess that's bad news. But it's price that determines whether something is good news or bad news and not the other way around. But we're not taught that, right? We're taught news matters and we're taught news determines the movement of the market. But actually, that's not true. And because people have not been trained to think in pictures and think in images and turn on the pattern recognition part of their brain to see things that they've been taught to ignore, what happens is they bring great pain and suffering and drama and trauma into their portfolios and their lives. Hey everybody, this is RC Peck. Hello to all my money badgers. And I have one price chart I want to show you. And I showed this to my training clients this week. And I think it's important because I went back to a time where there really was news. And the time I picked was what I call the 1960s. And on the screen right here, this is leading into the Bay of Pigs. Not the Bay of Pigs, the Cuban Missile Crisis. The actual Bay of Pigs happened in April of 61 right here. Nothing really happened in the stock market. But the Cuban Missile Crisis leading up to it, the actual Cuban Missile Crisis was a 2-week period in October. And notice that by the time the Cuban Missile Crisis happened, this is so interesting. The Cuban Missile Crisis actually ended on October 28th. Okay, so now this square right here is 90 days. So maybe October 28th is right about here. But to me, what's so interesting is price never broke below the July low. And when the actual Cuban Missile Crisis happened, price did not break below that July. But that was real news that moved the market. If I then would ask you, show me where Kennedy was murdered. Show me where he was murdered. If you didn't know that the United States president, our president, was murdered somewhere in here, you might not know that it was actually right here at the end of 63. There's a little dip right there, right? So something registered, but notice that the market just kind of said, yep, assassination, and the market kept going higher. That's incredible, right? The market is such a great neutralizer, figuring out what matters and what doesn't matter. In fact, the market had broken out to new, could have been lifetime highs when it broke above this 1961, had a little pullback with the assassination of JFK. This is amazing. And then we move forward, and I want to move forward to a couple other dates. And the dates I mainly want to talk about are in 1968. So Martin Luther King Jr. was murdered in April, right here. So that shows up a little bit for the 1960s, right? We're looking at a decade of information, right? And then you have Bobby Kennedy murdered in June of the same year, which was about, if I have to go, was right about here. Almost didn't even show up. I mean, that's pretty amazing. And if you type in the peak of the Vietnam War, what you'll get is 1968 was the year that we had the most American troops in Vietnam. I believe we had about 550,000, which was the peak in 1968. And that was the year that cost the US government the most to be in that war, which in today dollars would have been right around $500 billion just for that year. It's actually a little bit more, about $550 billion to fight the Vietnam War in 1968. And the stock market went higher. The thing is, we've been taught to go to news and go to information. But actually, it's those who get trained to think visually, trained to think in pictures, trained to turn on the pattern recognition part of their brain, which is there, but we've been taught to turn it off. And when you get trained to turn it back on, amazing things happen. Your angst goes away. Your overwhelm goes away. Your stress goes away. Your anxiety diminishes. You sleep better because you've been trained to say, okay, what really matters? I need to just look for those critical few things that matter and be able to filter out everything else. And if there ever was a decade where trauma and drama and pain and real, are we going to get through this type news, one of those decades, maybe not the top, certainly at the top, is the 1960s. And what's amazing is once you get trained to see what you're supposed to see and filter out what doesn't matter, your life changes. You get control back over your money because you've got more to lose now, right? It was not good when you were 45 and your money got cut in half, but when you're 55 and that happens, that's pretty painful. Or it was painful when it happened at 55, but now that you're 65, you can't afford to wait a decade or a decade and a half to get your money back to break even. And that's where training comes in, to train the brain to know when to step aside, to know when to be in, to know which sectors, and to actually do what you're supposed to do. And so I thought it was just a great way by showing you, the great way being showing you a decade that had really bad news coming out, and that if you're trained, you go, okay, yes, but the market's going higher. And ultimately, my portfolio goes up and down based on what the black squiggly line does. Thanks, guys, for being in my world. And this is just another step in helping you protect your portfolio and your future. Until next time, this is RC Peck.